Hello and welcome back to the Volunteer Income Tax Training Series. My name is Chris Moon. I am an Associate Teaching Professor at Iowa State University in the Ivy College of Business. This video is going to focus on education credits. We talked briefly about these when we were in the income section, and I talked to you about the 1098-T that is usually issued by the university for the students. And so the information for education credits a lot of times comes from that 1098-T. So we are going to go through in this section, and I will talk about the different types of education credits and what those amounts are and who is entitled to take those. All right, sorry, I'm going to flip back here. This is, I usually skip over the key terms in these videos, but there are quite a few things that you need to know the definition of for the education credit. The American Opportunity Credit and the Lifetime Learning Credit are the two different credits that we're going to talk about. There's also qualified expenses. That's not, the qualified expenses isn't actually a term that's listed here, but qualified expenses is definitely something that you need to know for each of the credits, and also knowing that the difference between a refundable and a non-refundable credit. Since this is the first video that I'm doing that talks about credits, I'm just going to briefly talk about the difference between refundable and non-refundable credits. Non-refundable credits can get your tax bill down to zero, but they can't, if the credit is more than your tax, it will not result in extra money coming back to you. If the credit is a refundable credit and the credit is more than the tax that you owe, it can result in a refund of the excess of that credit. The Lifetime Learning Credit is a non-refundable credit. The American Opportunity Credit is partially refundable. So to the extent we can get the client the American Opportunity Credit, that would be more beneficial to them because it is refundable. All right, so education credits are based on the qualified education expenses during the year. Those are generally issued to the student on their 1098-T. Now, there could be additional qualified expenses that do not show up on the 1098-T, such as required books or supplies, but most of the time, the majority, if not all, of the qualified education expenses show up on that 1098-T. You could be disqualified from taking an education credit, number one, if you can be claimed on someone else's tax return. So if you have a 20-year-old who's being claimed on their mom's tax return, that 20-year-old cannot take the tax credit. The mom can, but the child can't. If the taxpayer has an AGI above the limit for the filing status, if you take a look in tab J in the 4012, it will give you those income limits, but also if you just enter the education credit information into TaxSlayer, it's automatically going to calculate if the taxpayer has too much income or has an AGI above the limit. If the taxpayer was a non-resident alien for any part of the tax year, then they are disqualified from taking the tax credit. In order to claim the credit for a student's qualified expenses, the taxpayer must claim the student as a dependent, or the student must claim themselves. The expenses must have been paid to an eligible education institution, and there's a link there to search for eligible institutions. Again, it must be qualified expenses, which is also defined. If it may seem obvious that the taxpayer must claim the student as a dependent, but sometimes we will run into situations of divorce. So let's say you've got a 20-year-old in college, the 20-year-old's parents are divorced, you've got mom and dad, and let's say mom pays $10,000 in expenses, dad pays $10,000 in expenses, and dad is claiming the child as a dependent. Well, that 1098-T is going to show $20,000 in qualified expenses paid, assuming that they were all qualified. And the only person entitled to take that credit is the person claiming the student as a dependent. So even though mom paid $10,000 in this situation towards the qualified expenses, mom can't take the credit because mom is not claiming the child as a dependent. So it gets a little sticky sometimes, but it's important for you to know that aspect of this. Qualified expenses are generally tuition and required fees. The 1098-T that's issued by the school, as I previously said, will generally give you those qualified expense amounts. As I said previously, when we were talking about the 1098-T in the income section, in the income video, you must offset the amount from box 5 from box 1. So box 1 is going to show the qualified expenses, but if the student received tax-free educational assistance in the form of scholarships or grants, that's going to show up in box 5. So if you have $20,000 in box 1, that will be your qualified expenses. And then you have $15,000 in box 5, you got $15,000 in scholarships. The only amount you can claim for qualifying expenses for the education credit is the difference, the $5,000. It's also important to note that the certain related expenses that are allowed as part of this credit, the definition is different depending on whether you're talking about the American Opportunity Credit or the Lifetime Learning Credit. So in the Lifetime Learning Credit, it's more inclusive. You can use more expenses for the Lifetime Learning Credit, but it's also not refundable. So you can get the expenses up a little bit higher to reduce your tax bill, but it's not going to be refundable. It's important to know that because once you figure out which credit you're going to use for the taxpayer, you need to go into your 4012 and make sure that you're giving them credit for all of the expenses that qualify under that particular credit. All right, the American Opportunity Tax Credit, like I said, this is partially refundable. 40% of the credit is a refundable portion. The credit is for 100% of the first $2,000 and 25% of the second $2,000 of eligible expenses. So if you have $20,000 in eligible expenses, in this circumstance, it doesn't really matter because only $4,000 of that is going to be considered, and the credit amount is only going to be $2,500. But part of that, 40% of that, is going to be refundable. This is only available to college students that are in their first 4 years of college. And so once they're in a master's program or graduate program, they're no longer eligible for the American Opportunity Tax Credit. So this is just available for undergrad, and you can only take it for 4 years of undergrad. But 1,000 of it can be refundable, up to 1,000. So that's the advantage. Lifetime Learning Credit is 20% of the first $10,000 of eligible expenses. So the maximum amount of this credit is $2,000. The disadvantage of Lifetime Learning Credit is that it is non-refundable, but it's also it's available to so many more people. Okay, so you don't have to be in your first 4 years. It could be for you don't have to be enrolled in a degree program. If I decide that I want to go back and take a class, one class, I could, as long as my income is low enough, I can qualify for the Lifetime Learning Credit. So it's just more inclusive. It allows more people. It allows more expenses. And so the advantage to the Lifetime Learning Credit is that more people can use it. You have to choose between the two credits. You can't take them both, so you have to choose one or the other. I will tell you that TaxSlayer really does a pretty good job of choosing the better of the two credits. But if TaxSlayer is going to choose the lifetime learning credit, I encourage you to go back and make sure that you've gotten all of the qualified expenses in there, because you get a little more for the lifetime learning credit. So again, American Opportunity Credit is refundable. So if you're in your first 4 years of education, probably want to try to give that one to the taxpayer. Otherwise, lifetime learning credit is a great opportunity to get your tax bill reduced. When you're determining the amount of the credit, number one, TaxSlayer is going to do this for you, and it is going to produce Form 8863 if you have the tax credit. Just as a reminder, if you are at a site that is doing non-resident returns, so if you're doing 1040 NRs, non-residents do not qualify for education credits. So they don't qualify for a lot of credits, but they do not qualify for the education credit. So even though we have a ton of students who have a ton of expenses, they don't qualify for this credit because they're non-resident filers. So just make sure you note that if you're at one of those sites. All right, so you'll enter all the amounts into TaxSlayer. It's going to produce Form 8863. So if you need some help explaining the tax credit, how it was calculated to your client, you can just look at the 8863 and that will show you how the calculation was formed. Out of scope for this lesson, any taxpayers who must repay part or all of education credits paid in a prior year. So we've talked about American Opportunity Credit and the Lifetime Learning Credit. Hopefully you understand the benefits of each one of those, and really, if you have the opportunity to give the client the American Opportunity Credit, that one it's a little more and it is partially refundable. So I would recommend that one. All right. Thank you.